Good morning, it's me, Kenny Polcari, your host of the party, and today is Wednesday, October 11, 2023. And where am I today? Well, I'm in Midtown Manhattan. That's Central Park South behind me, otherwise known as 59th Street. I'm here at the entrance to Central Park. And so what is it that we need to know today, and how can you get your day started? Well, here's what you do need to know, right? Bonds continue to advance, which means yields continue to move lower. There's lots of Fed commentary between yesterday and today, and the message, well, it seems to be that we're going to remain in pause mode, and the market seems to be okay with that. The PPI was due out today. The question is what was going to show. Well, guess what? Came in hotter than expected, but don't worry, it's mostly transitory, I'm sure. And the FOMC minutes are due out at 2 o'clock today as well. What will they show? And the Middle East conflict now enters its fifth day. Jojo gives a speech to the nation yesterday offering support for Israel, but says nothing about Iran. And what do we have for dinner tonight? We're going to have the chicken scampi, but we'll get to that in a moment. So stocks have been surging, and they surged again yesterday. The Dow ended the day up another 135 points. The S&P up 23. The NASDAQ advanced by nearly 80 points. The Russell was up 20, and the transports gained 135 points. The Fed heads, they're tripping over each other, trying to convince us in the markets that maybe they have done enough, right? Or that maybe now we're in this official pause mode. Bostic saying it the easiest. Policy is restrictive enough. Vice Chair Philly Johnson said that we're in a position to proceed carefully. Lori Logan adds that higher yields may mean less need for the Fed to have to raise rates again. And guess who? Minneapolis Fed President Neely Kashkari is perplexed about why rates are rising, saying that it's hard to know. But it's possible that the government is issuing so much new debt that there's an oversupply, right? So it's that classic supply-demand equation, right? More supply means lower prices. Now, it puts downward pressure, certainly supply of government bonds puts downward pressure on prices, and so therefore yields go up. He also offered maybe another lesson, that maybe it's just that the U.S. economy is so strong that we can expect higher growth for the next 10 years, right? So higher rates reflect that analysis. In any event, he went on to say that the Fed is getting mixed economic data and that they're trying to make some sense of it. Well, that's good. I'm glad they're trying to make sense of it. He also went on to say that we're in for a soft landing, something I can't imagine we can actually achieve. But he remained coy on what the Fed should do in the next 2 weeks. Recall yesterday I told you that Neely has been calling for a 6% terminal rate along with Loretta Mester and a couple of the others. If he changed his tune, then that would be a notable change. And it kind of sounds like he's changing his tune. Then Fed Governor Chris Waller said that they're going to stay on the job until they get inflation at 2%, right? So that doesn't really feel like he committed to remaining in a pause mode, but we'll see. This morning, Fed Governor Michelle Bowman was a bit clearer. She told us that she thinks the Fed needs to hike further, telling Bloomberg.com that despite recent improvements, the inflation remains well above the FOMC limit of a target of 2%, and domestic spending remains strong and the labor market remains tight. So in the end, it sounds to me like 3 of them are committing to no hike. 2 of them are playing on both sides of the fence. This way they can protect themselves, right? They can always say, see, I told you, no matter which way it goes. They can say, see, I told you. And one of them is firmly calling for higher rates. And not to be outdone, guess who chimes in this morning in the Wall Street Journal? Nikki Timmerose, right? You know, the Fed's deep throat. When they want to send a message to the markets or talk about direction that they're going to take, they leak this story to Nikki, who then publishes it in the Journal, and then it's all good. All you have to do is go to page 82. You'll see the headline. Higher bond yields likely to extend the Fed's pause. And you know what the clue in that sentence is? The word likely. And so let's move on. Surely Goldman Sachs is due to put out a follow-up note at any day now, right? That's the 1-2 shot that the Fed gives, right? They first call Nikki, then they call Goldman. So keep your eyes open because you know it must be coming. Now, Fed fund futures this morning were showing a 60% chance of no rate hike in November and a 70% chance of no rate hike in December. Very different from what they were last week. Essentially what the market is suggesting is that the need for lesser is better. And in this case, lesser, we're talking about lesser rate hikes, not lesser for longer, right? I still think that they do need to hold rates higher for longer, and I think they've made that very clear. But I guess the narrative could change if the plot thickens. And the plot appears to be thickening, but just not with the economic issues as much as with the geopolitical issues. And while those issues don't usually price stocks in the long run, they provide, as you know, short-term chaos. And while this will too, this situation at the moment will provide chaos, I'm just not sure yet it's going to be a reason for the Fed to have to change the narrative. So while I now think the Fed's going to pause, and it doesn't mean I agree with it, I remain in the higher for longer camp. Now, in addition to the PPI report, which came out at up 0.5%, which was well ahead of the expectation, we're also going to get the latest FOMC minutes, right? What are they going to reveal about the Fed think behind the Iron Curtain? And then tomorrow we're going to get the latest CPI report. And the risk there, and by the way, to the PPI as well, is to the upside, mostly driven by energy prices and what that does to nearly everything we do and buy, right? An upside surprise could disrupt this new pause narrative, and then the risk for stocks is to the downside. Stocks and bonds is to the downside. Again, right? So now while they appear to be saying pause, don't think that an additional rate hike could be in the cards. Couldn't be in the cards, because if it appears that the Fed is premature in this decision to pause, something reminiscent of what happened during the Volcker Fed in the 1970s. Don't let me remind you what happened then, right? Do I have to tell you what happened when they prematurely paused? I didn't think I did, because once again, they prematurely paused, and then he had to come back and start raising rates really fast and high. In addition, yesterday brought us the New York Fed one-year inflation expectation. That was just a little bit hotter than the expectation, coming in at 3.67% versus 3.63%. And while it appears to be insignificant, the fact is it was up and not down. But apparently, nobody seemed to care about that little data point yesterday. So why did they then make it a big deal that we had to expect this number? Additional economic data that's coming out today was mortgage apps. Last week they were down 6%. That shouldn't be a surprise. What will that data point show today? More weakness or not? Remember, 30-year rates are at 7.5%, and they're likely to tick higher. Now we're in the usually slow fall season anyway. Sellers now have a decision to make. Do they want to risk rates going higher into the spring or not? Another tick higher in rates is going to surely begin to cause the sellers to get more anxious and more aggressive when they are pricing their property. And that is, by the way, what the Fed wants to see, right? They have to see housing prices come down. They have to see them come down, right? But that's a whole other issue. We could talk about that, certainly at a later time. U.S. futures this morning were up, right? They were up again. Dow futures up 80, S&Ps were up 10, the NASDAQ was up by 45, and the Russell was up 3. Treasury prices continue to push higher, and that is sending yields lower again, right? The 2-year is now yielding 4.96, the 10-year is yielding 4.55. The dramatic move off last week's push towards 5%. Remember, the 10-year almost kissed 5% last week. The shorter duration 3 and 6 month bills are still continuing to yield 5.5%-ish. But that's all going to change after today's PPI number. While futures were still up, there's a sense here that maybe they're just thrashing around and will start to trade lower. Oil continues to hover around the 85.50 level after testing 81.30 earlier in the week, right? It's now back on the north side of the trend line, leaving it in that 85.95 trading range. Gold continues to push higher. Think the safe haven asset in the middle of all this chaos. This morning it's up $11 at $18.86 an ounce. This is the geopolitical tensions rise as well as the dollar softens on the back of some of that Fed commentary suggesting another pause, right? The dollar index is now trading at 105.82 and likely going a bit lower if the Fed in fact remains in pause mode. If it does, look for gold, that we could see gold test as high as 1927, which is the trend line, which will probably force it to find some resistance. European markets were all mixed to lower this morning after the strong rally that they saw earlier this week. Bank of Portugal Governor Mario Centeno telling us that the ECB, while willing to raise rates, is likely finished hiking as well, which puts them in pause mode, and that's what's caused the advances across the region over the past week. And like in the U.S., the ECB is expected to hold those rates higher for longer. Now, yesterday we learned that the Eurozone inflation came in at 4.3%, a level that they haven't seen since October of 2021 when inflation was on its way up, right? Now, on the geopolitical front, the unfolding conflict across Israel and Gaza are scenes out of a nightmare, and it's only getting worse, right? Hezbollah is launching rockets now from the north, from Lebanon into Israel, while Syria is now launching rockets in from the east into Israel. videos of not only the rockets, but raw videos of the barbaric nature of Hamas is mind-numbing and difficult to process. And this is causing outrage across the developed and civilized world, except certainly no outrage in Iran, Lebanon, or Syria, which says it all. Jojo, interestingly, remained hush during his press conference on Iran's role in all of this. And that did not go unnoticed, by the way. The S&P closed now at 43.58, up 22 points, and there's a real possibility that we could kiss and test trendline resistance at 43.85. Now, a quick look at the chart reveals that the intermediate resistance and short-term resistance are about to cross, with the short-term resistance slicing down through, not up through, and that's going to cause some consternation for the markets, right? As it struggles with what to do next. If we push through, then we could see the S&P advance, testing levels seen last in late August, like in the 4,500, 4,525 level, which again only supports my point as a long-term investor. Stick to the plan. Don't try to pick tops and bottoms. Don't try to trade it. Build a strong, well-diversified portfolio, and in the end, you will be fine. Okay, so now, what do we have for dinner today? Well, this seems kind of appropriate, right? Chicken. We're going to have chicken scampi, which is kind of a play on the shrimp scampi, except you're going to use chicken instead of the shrimp, just in case you don't like shrimp, right? It's easy to make. You can serve it over linguine. You could even serve it over white rice if you want. It's the perfect alternative to the more traditional shrimp scampi for anyone that doesn't like shrimp or doesn't want to eat shrimp for whatever reason. Now, for this, you need like 1.5 pounds of skinless, boneless chicken cutlets, right? Chicken breasts. You're going to cut them into small bite-sized pieces. You need salt and pepper, butter, olive oil, garlic, sliced garlic. You need a 1/4 cup of dry white vermouth. You need 1 tablespoon of freshly squeezed lemon juice. You need finely chopped parsley, some grated lemon zest, and if you're going to put it over pasta, you need 1 pound of linguine. Now, you want to rinse the chicken, pat it dry, season it with salt and pepper, and set it aside, right? So you're gonna have cut it into cubes. So rinse it, pat it dry, paper towels, season it, set it aside. In a large non-stick skillet, one that's going to accommodate everything, you're going to put the butter, a little bit of olive oil, you're going to put the garlic in there, saute it around for a couple of minutes, raise the heat not a high, get the pan really hot, add the chicken pieces. Right? Now, you might have to do it in batches because the chicken will suck the heat out of the pan, so you want to get them cooked, right? But one way or the other, you're going to cook the chicken in there for 8 to 10 minutes, and when it's cooked, you're going to remove from the pan and set it aside. If you have to repeat, just repeat, but once you're done, set it all aside. After you've done that, now add the vermouth and the lemon juice to the pan, bring it to a boil. It should begin to thicken a little bit, no more than 40 seconds or so, that's it. You're going to add the lemon zest and the parsley. You're going to scrape the bottom of the pan to get off any bits. You're going to turn off the heat, and you're going to add back the chicken, and then you're going to stir the chicken in that sauce to coat it well. At this point, if you're going to serve it over linguine, you will have boiled your pasta. You're going to put the linguine right in the saute pan, mix it all together. You should serve this also with a large mixed salad, maybe tomatoes, cucumbers, scallions. Dress it in olive oil and a squirt of fresh lemon juice and a shake of dried oregano and some salt and pepper. Make it simple. It finishes this dish off nicely. And don't forget, this is also one of those dishes that you can use with some toasted Italian garlic bread. So delicious. And you can enjoy this with your favorite chilled white wine. This is not really a red wine dish. Again, if you're going to drink red wine, make it a light red wine. But otherwise, I would drink this with a chilled white wine. And you know, my favorite is always the Pinot Grigio Santa Margherita. In any event, live from New York City, I am Kenny Polcari. And until tomorrow, take good care.